Hello, welcome, and thanks so much for joining in. I'm Alex Matthew, and with me is Tamanna Inamdar. And first, before we begin this show, let me extend the warmest of season's greetings to all of you that are tuning in. Happy Diwali, and my fervent hope is that the prosperity that you saw in Samvat 2079 extends into Samvat 2080. What a year it's been.
What a year indeed. It has been the year when the whole mutual fund Sahi Hai campaign has fructified into real numbers, fantastic SIP contributions, AUMs completely burgeoning, and the strength of the Indian investor showing up in every way, in every kind of statistic that you may look at. What we're going to do on the show today is get you some of the biggest voices from the mutual fund industry to understand what the next Samvat 2080 is going to be all about and whether this festive cheer can continue beyond the season as well. So let me bring into the show and welcome today to speak with us Radhika Gupta, MD and CEO of Edelweiss AMC, KalpenParekh is with us on the show today, MD and CEO DSP Mutual Fund, and Nilesh, Shah, Group President and MD Kotak Mahindra AMC. Welcome to all of you and a very, very happy festive season from the entire family here at BQ Prime. Great to speak with you today. Let me begin with Nilesh bhai and your take on what a fantastic year it has been and like I said, in every which way that you see it. What is that telling us about the Indian investor and how you are looking at the next Samvat, sir?
So thank you, Tamanna, for having me over here. Wish all the viewers of BQ Prime a very joyous festival season. Well, to say about Indian investors in today's time is like talking about Indian bowling. In the World Cup, 8 out of 8 matches, Indian bowlers have won the game. Same thing is happening with Indian investors. They have discovered the mojo. They are sticking to their line and they are taking all the opportunities available. In most emerging markets, entry is easy. Paisa fenko, tamasha dekho. And exit is difficult. A global investor, when he sold his shares in China, couldn't take the money out. Korea has banned short selling as we speak. In Indian market, exit is easy. Between October 21 to June 22, almost $32 billion plus worth of equity was sold by FPIs and they could take everything out. On the other hand, entry is easy. When they have to buy the same shares or others, they have to pay a premium. So truly last year was resilience of Indian investors, maturity of Indian investors, and this has done one very, very formidable thing. It has reduced the beta risk of India. It has lowered our beta relative to other emerging markets. That means eventually this will be reflected into the risk premium or return expectations of global investors. So all kudos to mutual fund distributors and retail investors who participated via mutual funds to ensure that last Samvat was good. And I expect this trend to continue in the next Samvat.
Okay, let's get the views of Radhika and Kalpen in as well. Radhika, I'll come to you first. I think across both your industry and ours particularly because we've been screaming from the rooftops that SIP is the way to go and to invest consistently. That 16,000 number, do you think it's the biggest highlight from Samvat 2079?
I think it's not only the biggest highlight from this Samvat, but I think it is perhaps the most magical thing our industry has produced. Some of you know that what is incredible about SIP is it has worked for Indian investors and entered the mainstream language. I was shooting at Film City yesterday, as some of you know, and in an audience of 50 people, when I asked how many of you had done an SIP, not everybody raised their hand, but everyone knew what an SIP was. And this is Film City and it's a camera crew. And I think that's how much SIP has become popular. I think why we should take heart in an SIP is that if an investor invests in any equity fund in any of the AMCs on this panel or otherwise and stays a 10-year investor, even in a scenario where markets are 0 to 10% kind of flat, the investor makes a meaningful return. SIP has also become a way of saving in a disciplined way for Indian investors. In fact, I always tell new investors, just start ₹100 SIP because you will start a format. So SIP solves a problem for investors, one of getting into a savings habit and then of earning a meaningful return on your savings so that you're not questioning yourself on why I invested. My belief is, Alex, that this 16,000 crore SIP book that we have will probably be about double the size, about 35,000 crores 5 years from now, which will be incredible. I mean, DII, domestic ownership of Indian capital markets, is only rising close to 20% now. It was 10% a decade ago. And I think if the SIP movement continues, it will be good for investors and it will be better for capital markets.
You know, Radhika ji, since you've referred to your new avatar as a shark, and since your fins are up, what really is, what really is the target right now? Investors and viewers would want to know what the next year is going to look like. Is there more meat left in the market, so to speak?
Well, I think my shark has nothing to do with my role as mutual fund CEO.
I know that. I'm talking about the aggression. I'm talking about the aggression.
No, I think they are related in a way that is very obvious, and that is Indian entrepreneurship. I think if you look at the next 10 years, then Indian entrepreneurship is very exciting. The animal instincts of the private sector, and I always say that whether you're sitting in the position of a mutual fund CEO and investing in companies and seeing the corporate earnings growth, whether you're seeing the confidence of Indian retail investors, or whether you're sitting on a set on Film City and seeing 22 and 23 and 24-year-old investors from all parts of the country, including smallest towns in India, dream about building 100 crore and 200 crore revenue franchises. These are all the successes of Indian entrepreneurship. And that is the aggression and that is the spirit that will carry forward for the next decade. Some of those companies, I hope, will become very high quality companies and hopefully one day listed companies. So it's all related. It's all a celebration of Indian entrepreneurship.
Absolutely. And higher expectations as well, I would say. KalpenParekh, great to have you on the show and an opportunity to speak at a time when the Indian investors' appetite has also grown. Look at the kind of fund flow into mid-cap and small-cap funds. And clearly that has been, would it be fair to say, one of the top headlines of this Samvat? One of the big stories of this Samvat, and do you see that continuing?
Yeah, I think definitely the headline has been, trending, everything trending green in terms of direction, whether it is flows, whether it is past returns, whether it is, the optimism about the future. And I just would like to also add that I was seeing multiple markets right now in the last 12 months, 6th November last year to 6th November this year. Bond funds have earned around 7%. Nifty has earned around 7%. Nifty 500 is 9%. Global markets have done around 12 to 13%. So just wanted to, bring in the fact that everything has been trending upwards. Gold itself is up 21% in the last year, similar to, mid-cap as an index. So I think the Indian investor who stays invested and is well diversified and well asset allocated, being a rational investor, taking advantages of, the benefits of multiple asset classes, multiple themes doing well. So it is a good time, and it is only in good times that one has to be, prepared that in case volatility comes in, how do you navigate? And like Radhika mentioned, I think the beauty about SIP, which is underrated or underspoken, is the fact that asset classes will be volatile. So while today we speak at reasonable market highs, volatility is a order of the day. In the last 1 year alone, in the first 6 months, our markets first fell, then they recovered, and in the last 1 month or so, they've again been falling. So for an SIP investor, he's actually accumulating more units when intermittently prices are coming down of any asset class, whether Indian equities or global equities or fixed income or gold. Fixed income itself has shown huge volatility in the last 2 years all over the world as well as in India. And I think the beauty about the Indian investor is the embracing of volatility, acknowledging that it will always exist, not running away from it, and letting money be invested, and also accumulating more units all through these ups and downs that we've seen in the last year as well as the last few years.
Okay. One part of this show is always dedicated to giving advice for the next year. And since Nilesh started with a cricket analogy, I think I will continue in that vein. As we watched King Kohli get that 49th 100, we saw that he adjusted his strategy to the pitch and to the conditions. And if I remember my statistics correctly, he scored about 10 boundaries, which is 40 runs out of that 100 that he scored. And he was more focused on staying till the end. So, Nilesh, as we head into this new Samvat with the kind of uncertainties that are around and the fact that we were expecting a downturn in the US economy to hit right now, but that is now perhaps down in the future, what advice would you give to the Indian investor? They've gone whole hog into small cap and mid cap. Should they adjust their expectations and their playing style in the new year?
Undoubtedly, yes, Alex. If you are like Rohit Sharma, you can start aggressively. But do remember that if you want to build a long inning, then moderation might be required according to the situation of the pitch. Today, if we look at US, yes, the much anticipated recession has not come. But when we were anticipating recession, we were looking at a US fiscal deficit of about $1 trillion. The recession has been avoided because fiscal deficit has crossed $2 trillion. When you throw money like that, undoubtedly recession can be avoided in the short term. But there is a cost to the rising fiscal deficit reflected in higher interest rates, and eventually the recession will follow. Compared to the global world, India is looking like oasis in the desert. And there is also Birbal ki kahani happening for India. When Akbar told Birbal to make a line bigger without touching it, he drew a small line below it, making the line above bigger. Our growth story is good, but our peers are scoring self-goals. Russia's invasion of Ukraine has shut that country for investors. Brazil's communist government has created worries for global investors. In South Africa, the strife which is there and the slowdown which is visible is again unnerving investors. Taiwan, you can't go because of China risk. China, you can't go because of real estate bubble. Put together, others are doing badly, we are doing well, and hence our story should continue. Now, obviously, you need to apply. If there are half volleys, go and hit it for a 4 and a 6. Don't be happy with 1 run. But when there is a Yorker coming, a swinging ball coming, then please try to save your wicket. It's time on the pitch which will make run for you rather than hitting every ball for a 4 and a 6. The same philosophy applies in the market.
Nilesh, just to follow up there, you said the recession in the US has been avoided. Do you think it's been postponed in a sense? People are talking about first half calendar year 24. How does that play out for India? And just a small additional question. In the last 3 months, foreign investors have sort of been exiting while domestic investors have been holding guard. Do you think the big change in this Samvat is going to be when that tide turns?
So one, if US continues to print fiscal deficit, they can postpone recession for a while. But eventually insolvencies are rising because there is a higher interest rates. Banks' balance sheet are coming under pressure because of rising interest rates. Unlike India, where housing loans are on a floating rate basis, in US it is on fixed rate basis. Third, the US fiscal deficit is unlikely to come down, and the appetite for US Treasury is coming down. So eventually the dream run will come to an end, and there will be slowdown in economy or a reasonable recession, which will then reset entire thing. From India's point of view, if others are doing badly and we are doing well, undoubtedly that's the best outcome. If US slows down or goes into recession, there will be impact in our IT business, there will be impact on our pharma companies, but we can more than make up for it through domestic consumption growth, through domestic investment growth. There is a combination of three things coming together. The first is the formalization for India. Unorganized sectors which were uncompetitive, which lacked economies of scale, are slowly and steadily giving rise to formal sector which is more competitive, which is bringing economies of scale. Second, there is financialization. For growth, you require investments. For investment, you require savings. Our savings was going into more real assets like gold and real estate. Slowly and steadily, money are moving towards financial assets, which is enabling growth capital for our entrepreneurs. And the third thing which is happening for India is functionalization. There are eye hospitals in India whose strike rate or success rate is better than the best hospitals in US. There are companies which are producing globally competitive products despite the logistics and power mismatch in India. So slowly and steadily we are getting that competitiveness which will help us make part of global supply chain. We can, along with back office to the world and service provider to the world, can become manufacturer to the world. It's a long, tedious journey, but we are on our way. So formalization, financialization and functionalization put together creates better growth opportunity for India. No matter what happens globally, it will have some impact on India. But if we make ourselves better, I think global capital will come to India.
And that plays into that Atmanirbharta goal that we've had and worked on for a while. Radhika and Kalpen, I'll come to you very quickly on your key advice for the new Samvat. Radhika, I'll start with you.
So in one line, and then it is to adopt the middle path. In the investment world, we swing at extremes. So you have FD investors who become small cap investors. Reality is, I think, good in the middle path. I will not spend too much time on the macro backdrop because that has been already discussed. But you're not at a point, you're in a point where things are extremely optimistic, but valuations are not extremely cheap, and there are uncertainties, and markets are never perfect for investing. Adopting the middle path is important. So a lot of investors come and say mid cap, small cap. Now the reality is, I don't believe that a portfolio can be only mid and small cap because that carries a certain amount of risk. I also don't believe the solution is to jump out of mid and small cap and build a large cap portfolio. In fact, one of my firm beliefs is that if you look at the Indian opportunity over the next decade, it is truly a multi-cap opportunity, because if you want sectoral representation or some of the stories that we speak about, whether you look at our manufacturing opportunity, our capital goods opportunity, EMS opportunity, diagnostics, even capital markets, financialization, many of those are mid and small cap opportunities. And yet there are large cap companies that only have 5% market share. So adopting the middle path, which is probably a multi-cap fund, is one way not to swing on extremes. The second is, of course, I don't understand cricket analogies as well, but I do understand food, and this is festive season. You don't go on extreme diets and you don't do's all day. You adopt the middle path, and that is the good Indian thali. It has a blend of one necessary sweet, but it has a blend of dal and rice and everything. And I think asset allocation is that middle path in investing. For many investors, either building an asset allocation portfolio that has multiple asset classes, including gold, silver, domestic equities, international equities, which are out of favor, and also fixed income, or using hybrid funds that this industry has done such a good job of managing. Balanced advantage, aggressive hybrid is another way to adopt the middle path. So my simple advice is adopt the middle path in your equity investing and in your asset allocation.
That last point particularly is what I wanted to go to you on, Kalpen, anyway, because in a recent mutual fund show conversation, you ended the conversation with the point about hybrid, and you also said that the best time to reallocate and correct mistakes is when you're still making gains, when you're still in the green. Would you reiterate that advice today, or has anything changed?
Actually, it's only got accentuated. So I'll just add to what Nilesh and Radhika have said. My strategy at this point would be divide and rule. Divide asset classes across Indian stocks, global stocks, commodities like gold and silver, and bonds. Because in the last 10 years, Indian markets have got two great points. The starting point was great because we were at a 10, 11 P market in 2013. The end point today is also great because we are at a lot of good news and good valuations. So you could have not asked for more. We got earnings growth of around 9%. But market returns of around 12 to 13% CAGR because there has been multiple expansion. So in today's world, and also like Nilesh mentioned, a lot of other countries are doing self goals or policy errors. Is also giving opportunity for investors to invest in some of those global markets or stocks which are dominant companies, but not necessarily at very frothy valuations. So imagine like a T20 team where there'll be time when Indian players will play very well. There'll be time when some of the international best players will also pitch in. And gold again for the last, we've spoken in the last session also that across emerging markets, out of 25 countries, 24 countries where gold has delivered better returns than their equity counterpart in local currency terms. And that is also because those countries have had some or the other mismanagement in terms of policy or macro. India has been extremely fortunate. India is the only country probably in emerging markets where our equity markets have done better than gold, but hit close to each other, like 0.5% difference plus or minus. So in today's uncertain world with significantly large volume of fixed debt overhang across countries and their balance sheets, having an asset like gold may be valuable. Over 10 years, in dollar terms, it has done nothing. So it's a good entry point as well. So I think this is a time to celebrate the past returns, but also be prepared for significant or rather the usual volatility by diversifying, by dividing asset classes, and by ruling for a long period of time. So time horizon and diversification, these are two weapons which would be very useful in times ahead.
So far on the show, we've been speaking about advice for investors. And since we're also celebrating a new year, which comes with resolutions, I'm going to turn the tables and ask all of our guests a very quick, short answer on what is your resolution for yourself? Because investor expectations are now sky high. Even though we've explained volatility and all the challenges ahead, they're going to be expecting similarly good returns. So I'm going to start with you, Kalpen. What is on top of your to-do list for the next Samvat?
I have two to-do lists. One is to lose weight and second is to gain units. These are my two to-do. Constantly gain units, keep acquiring as markets remain volatile, and on the other hand, focus on health and try and be more healthier.
Well, that's a tough one before the festive season starts, where there's going to be a lot of mithai on everyone's thali. Radhika, what would be on top of your to-do list? Because, investors, you saw the frenzy in small and mid-cap. Investors are now used to seeing their portfolios looking healthy. And it is, frankly, the job of all mutual fund bosses to ensure that.
So I think I divide it into two. As an investor, to really adopt the middle path, to do the boring things at a time when there is temptation to be gluttonous, not in food, but in investing. So to do that. But as a CEO and as a person, to stretch the learning curve, to get new experiences after 17, 18 years of working, it is very easy to limit yourself and say, I know everything. And I think markets have taught me that you learn every day. So in investing, to be very boring, but outside to really stretch myself, new experiences, new learning, that's my resolution.
Nilesh bhai, what would be on top of your list to make sure that those expectations that so many new investors have continue to be fulfilled?
So there is only one objective now as I'm reaching towards my final inning. Keep on lighting the candle. There's a lot of darkness in the world on variety of things. People trade in cryptos, invest in Ponzi, they gamble in FNO stocks and so on and so forth. Keep on spreading the light by spreading financial awareness. Today, there is a challenge on environment, global warming is real. What can we contribute to make the world better for our kids? A group of friends have come together to launch an app so that we don't have to use physical visiting cards. It's called Save Tree VC. These are the kind of efforts we are putting it to ensure that there is a healthy world and there is also a wealthy world for our kids.
Absolutely. Thank you so much to all of you for joining us and with that wonderful message for our viewers. Truly, Alex, high expectations and a lot of work cut out for this industry as well. If those SIPs are going to double in the next 5 years, so are the expectations.
No, certainly. And in the global context, as has been pointed out very adroitly by our experts, there's a lot to look forward to in the new Samvat, and hopefully you will share it with us. For now, let me once again extend season's greetings and the brightness and the light of the festival to all of your homes from us. Thanks so much for watching. This is BQ Prime.